Hi, it's Wayne from truthaboutmortgagerates.com and WFP Mortgage here with a rate update on August 12th. It's our first one in about a week and a half since July 31st. And there's been a lot of activity going on in the markets to cause rates to move up and move back down. But essentially, we're pretty close to where we were at that point in time. A little bit worse off since then, but overall, roughly in the same ballpark. Now, we've seen a lot go on since then, starting off with August 1st, we had the jobs report from the Labor Department showing that we still lost jobs in the economy, but less than expected. Again, not a great thing for bonds. Bonds would rather see things worsening, and it was good for overall economy and stocks. Now, another thing that we had that was good for stocks was the Fed kept rates the same. Now, stocks loved it, took off, and then really took money out of bonds. It's one of the things we talk about in our special report, Truth About Mortgage Rates. You can check that out for more detail. But that was one of the big things that took money out of bonds, flowing into stocks, again, hurting interest rates. Because over the last week and a half, we saw rates really move up, and now they've slid back down, trying to get down, getting close to the same point we were at. Now, we also had a very hot PCE report, which is Personal Consumption Expenditure. Basically, it's a gauge of inflation, and it's one of the top gauges used by the Fed to see what's happening with inflation. And again, much higher than expected. Again, showing that yes, we've had some inflation issues with oil going higher, all of the commodities moving higher. We expect to see that high inflation number. Now, obviously, since about a month ago, we have seen oil come down from a high of about 147 to now down over somewhere in the range of 30 some odd dollars, depending on how things are shaking out over the last few days, but down into the teens for the price of oil. Now, that's made a huge difference when we start looking forward and how the inflation picture is going to be looking. But looking in the past, yes, inflation was much higher, but finally the back has been broken of the commodity bubble, with oil and all the other commodities driving food prices higher, energy prices higher, and that really bleeding into everything else. So I think when we're looking forward, we're going to see the inflation coming down, which is exactly what the Fed had been hoping for and had been saying that was going to happen. I think it was a bit of a hoping for it, but I think the commodities were not going to continue to go at the same pace that they were at. So we've finally seen the back get broken of that commodity bubble, and finally seeing it all come down. And I think we're not at the end of it coming down. We'll see it continue. So that has overall helped in a general sense, but anytime we've seen oil really move lower, it has helped stocks. And if you've watched any of our other updates before, or if you've read our special report, Truth About Mortgage Rates, at truthaboutmortgagerates.com, you'll know that if stocks really are moving higher, they're going to draw money out of bonds, and when money moves out of bonds, the price moves down and the rate moves higher. And that's what we saw over the past week and a half. Now, the other things that we've seen affecting the market, we've seen initial unemployment claims actually really spike up to 455,000 last week. Now, that is a huge jump. We had been ranging anywhere from the 350s to 400, and somewhere again hanging out in the 370 to 380 range. But we had over 400 a couple weeks ago, and then we had a 455, a huge number, and really showing that there was continued weakness in the job market. Now, that again now helped to see bonds improve. One of the things that was driving bond prices back up and driving rates back down a bit. And so we see a bit of the conflicting things that are coming out here. Certain things that are helping stocks and certain things that are helping bonds. Again, overall, we've ended up back about the same spot. But we can see that there's a lot of things going on in the marketplace. And if you don't understand what all this means, you really could be, if you're looking to buy or looking to refinance, you really could be left high and dry and not getting things at the right time because there's so much volatility. It's really important to read truthaboutmortgagerates.com. It's still free. Okay, I say it's still free. You can still download it from our site. Just put your name and email in, and we'll send you a link to get that. But that's going to allow you to understand what all of this means in the context of whether you're looking to refinance or you're looking to buy, and the home loan that you can get, and whether it's going to cost you a bit more or a bit less when it comes time for you to lock in that loan. So make sure you check out truthaboutmortgagerates.com, and also our other site that is coming up, askyourmortgagemeltdownquestion.com, or for short, AYMMQ. Ask Your Mortgage Meltdown Question. You can go there right now, put your name and email in. We'll be notifying when that site is live, and you'll be able to ask your questions. Maybe it's about rates. Maybe it's about what's happening in the overall credit crisis. Maybe it's about real estate. You can ask the questions. Maybe you're not sure who to be asking. You're uncertain about all of the uncertainty that's going on out there. Everything in the mortgage crisis, the credit crisis, the meltdown, the housing depression. We're going to have that site to be able to provide answers for you. So go to AYMMQ, click the links over here for AYMMQ and truthaboutmortgagerates.com. Get the information for you. Until next time, this is Wayne from truthaboutmortgagerates.com.